Here's a noon update for September 2nd, 2011. The Dow 10-minute chart. Looks like we have wave 1, wave 2, wave 3, and now wave 4 off of the gap down third wave that we've gotten. Best case scenario is that we get a fifth down that truncates and then rallies back near the highs. Worst case scenario is that we get a pure fifth wave down that would test and or break the intraday low around 11,250, which means that we may test 0.618 Fibonacci support at around 11,150 next week. It's a 3-day weekend, so I'm assuming that people don't want to hold ahead of the weekend. But if they do want to hold again ahead of the weekend, then they'll rally to the close. But I think right now we're staring at a wave 2 right now on the look at the hourly chart. Looks like we have wave 1 and then wave 2. We basically fill the gap just about between 11,300 and 11,450. So we have a wave 1, wave 2, and we need to retrace to at least 11,550, 11,500 where the market closed yesterday. Say we do get 4, then 5, and then truncation, and then a rally back to positive. We're not down that much. It isn't like hideously, like, it's not a terrible drop. It's not like the 500, 600 point drops that we got in the middle of August. But it is still it appears to be a wave 2. For S&P, let me go to the 5-minute chart, 10-minute chart. Yeah, it's like wave 1, wave 2, wave 3, wave 4. So we got upward 4s, and worst case scenario is I get a downward 5 into the close that tests and breaks 1177 to the downside. If this occurs, then we could probably see a test of 1163, which is the 0.618 Fibonacci retracement of the entire move from 1122 to 1122 to 1231. Yeah, we rallied 110 points almost. Yeah, 110 points off the lows. And this could be at least a wave 2 for now. And if we can rally back over 1208 next week, then that would set up a retest of the high at 1231 and set up an upward 3. But for now, we need to watch this carefully because 1163 to the downside is 0.618 Fibonacci support. And that needs to hold in the coming days. For NASDAQ, looks like wave 1, wave 2. Wave 2 support is around 2442. That's 0.618 of the rally from 2337 to 2610. It was getting really sideways, and the market didn't seem to follow what I wanted. I had to jump in there and buy all this and push the zigzags up. Yeah, well, it's as it seems. But when that happens, when you start getting confused with the wave count, then you correct the market. And I was getting confused with the wave count because it was so sideways. And finally, they're like, okay, give up. And then boom, wave 2. And on the 10-minute chart, this the retracement off the lows isn't quite a 4, but it could be wave 1, wave 2, wave 3, wave 4. So the worst case scenario is that we drop in a fifth wave to test and or break 2490 to the downside, and set up a test of 2442 next week at 0.618 Fibonacci support levels. Best case scenario is that the fifth wave truncates and then we get a big rally into the close. Hopefully we get that. That'd be nice. That's a wrap.